So we are the audit engagement team for Nature's Beverage. My name is Zach Weber.
I'm Rana Hussain.
My name is Ken Tran.
And we're going to start off by giving you a high-level summary of the background of the agreement between ourselves and Coffee Co. So Coffee Co. is a global distributor of both coffee and tea. However, recently their business strategy has been to focus on their coffee. So with this agreement, we obtained a sub-license to distribute their tea, specifically their brand called Herbal Tea, in South America. Also with the agreement, we got all of their customer contracts for South America as well. However, we did not get their employees or their distribution capabilities. We spent $3 million for the sub-license and $50,000 for various fees such as legal fees and consultation fees. The accounting issue that arises is, does the acquisition of the sub-license meet the definition of a business? And then dependent on that answer, what is the accounting treatment moving forward with this acquisition? And to go into more detail about this, I'm going to hand it over to my colleagues.
Thank you, Zach. So the first issue that we need to address is, does the acquisition of the sub-license by Nature's Beverage to distribute herbal tea meet the definition of a business? In the Accounting Standards Codification, ASC 805, we are provided with the definition of a business and what criteria is used when determining if this definition is met. To summarize this definition, ASC 805-1055-3A defines a business as a set of activities and assets used for the purpose of providing economic benefits to investors, participants, etc., and to be considered a business, the following requirements must be met as outlined in 805-1055-4. Input, process, and output. We apply these inputs and processes to create outputs. With Nature's Beverage, our output, the result of when the input and process is applied, is revenues from selling herbal tea. We do not have a process in effect with this case, i.e., per the standard, a system or rule in place that will be used together with an input to create an output. And here that was distribution capabilities. We also do not have the input requirement in this case, the resource that creates outputs when processes are applied to it. Here, the input is the employees that execute the supply chain, since Coffee Co. retains all of its workers. Per ASC 805-1055-5E, the set of criteria does not meet the definition of a business, since the output does not have an input and substantive process that works together to contribute to creating an output. Additionally, we also look at guidance in 805-1055-5A through 5C to determine single or similar asset threshold. Most of the assets acquired are not concentrated in a single identifiable asset or group of similar identifiable assets. Why are they not similar assets? For example, the license, supply contract, and customer contract are not in a similar class or type. The license, for example, is an identifiable intangible asset along with customer contract, but they are not considered similar assets. Finally, per the aforementioned standards, most of the fair value of the assets acquired is not clustered in a single or group of similar identifiable assets. For these reasons, and by following relevant guidance, we cannot conclude the acquisition of the sub-license by Nature's Beverage to distribute herbal tea meets the definition of a business. And now I'm going to hand the discussion over to Tam.
So now, after determining this transaction is not constitute as a business, we decide to recognize the transaction as an asset acquisition based on ASC 805-10-25-1, which stated, if the assets acquired are not a business, the reporting entity shall account for the transaction or the event as an asset acquisition. Furthermore, the transaction is within the scope of the asset acquisition as it meets the recognized criteria from FASB concept statement number 6. The first criteria is probable future benefit. In this case, the license, which includes the customer contract, will likely to generate revenue in the upcoming period. The second criteria is control order access. Since they have the license to distribute herbal tea, the competitor won't have the ability to distribute the same product with the same brand in South America. And the third one is the timing. The entity will be able to recognize the assets after the closing of the agreements on March 1st of 2018. Now, after the recognition of the assets, we will determine how to record the transaction that consists of $50,000 for consulting fee and accounting and legal fee. And on top of that is $3 million for the sub-license. So, based on ASC 805-50-30-1, assets are recognized based on the cost and the transaction cost. In this case, the legal fee and the consulting fee is the transaction cost. Therefore, we will capitalize $3,050,000 for the assets sub-license. And assuming coffee company will give us a credit line, we will account for the account payable $3 million, but we still have to pay cash to the lawyer and the accountant for this service, which is $50,000 credit for cash. For this transaction, the assets will increase as well as the liability. Next, assuming the license will be valid for 7 years, the cost of the assets will be amortized for its useful life. So, assuming this entity have a calendar year end at December 31st, 2018, we will debit amortization expense for $363,095, and then we're gonna credit for the same amount for accumulate amortization as we prorating the expense. Next, I will pass it on to Jack to wrap up this presentation.
Thank you, Ten. So in conclusion, we all agreed that it does not meet the definition of a business. And then because of that, moving forward, we're going to capitalize the cost of the sub-license and those fees as well. Thank you very much for your time.